The immense loosening up of the once-in-a-century mining blast is just part of the way through, and another 50,000 employments are still prone to be shed by National Australia Bank. At its peak, mining investment accounted for around two-thirds of economic growth in Australia between 2011 and 2012, when it represented around 8% of gross domestic product, compared to the 4.25% currently. On the NAB's figures, 122,000 mining development employments were made between the beginning of the mining development blast in 2005 and its top in 2013, contrasted with just 34,000 operational and 13,000 investigation-related occupations. That has loosened up with 46,000 occupations lost between 2013 and 2015 monetary years, in spite of the fact that the rate of decay has settled as of late. The NAB expected net falls in mining occupation to proceed, especially in Queensland and Western Australia, as the decrease in development employments outpaces the expansion in operational labourers in the mines. Western Australia is prone to be harder hit given its speculation cycle is less very much advanced than in Queensland, and LNG plants have a tendency to be more work concentrated than open cut mines. The NAB conjectures this will tumble to 1.25% for every penny, which is towards the lower end of pre-blast recorded levels. We are presently living through the post-blast headache. Three elements have met up to convey a hit to monetary development and national salary. The first was generally anticipated: the end of the mining speculation blast, as the development of mines and related base is continuously finished. As venture is twisted back, occupations in the business have fallen. Economies that rose off the back of the mining blast, Western Australia, South Australia, and Queensland, are currently experiencing the weight of alteration. Or maybe less broadly anticipated have been two different components: a major surge of new supply of materials in world markets, with Rio Tinto, BHP Billiton, Fortesque Metals, and Brazil's Vale all flooding the world with record shipments of iron metal, close by a fast logjam in the rate of Chinese monetary development and interest for wares. The impact of these improvements has been a breakdown in wear costs, with further falls anticipated. Australia's terms of exchange, the proportion of fair cost to import costs, have fallen back in the wake of rising emphatically amid the mining blast. The stoppage in China will have a major effect. The IMF assesses that it could thump a full rate point of Australia's yearly development throughout the following 5 years. Individuals trust Australia could have taken after the case of a nation like Norway, which charges its petroleum industry vigorously. It charges 0.51% for each penny asset charged on oil organisation benefits, and also conventional wage duty of 0.27% for every penny. This brings the aggregated expense risk for oil organisation to 0.78% for every penny. Tony Abbott is so far depicting coal as the foundation of accomplishments, suggesting that Australia should be concerned. Another issue is that the uptick in development interest in the property area has not been sufficient to balance the consolidated impact of withdrawal in the mining-related building speculation. The more extended and more progressive dropping off in interest in apparatus and gear is another reason. The outcome is that business venture has succumbed to 3 straight years in low loan fees, which may have added to the lodging blast, yet have had little impact somewhere else. As a rule, organization sheets have picked to pay out higher profits to shareholders as opposed to furrow their aggregated surpluses again into growing the method for generations. The downturn in venture is harming monetary development. The declaration of a weak second quarter development of only 0.2% this year and 2.0% for every penny yearly development just affirm what has been clear for some time now. The development motor in Australia is sputtering. Undoubtedly, took a gander at over the long haul, the development has been slanting down for a long time, and when populance development is controlled for, the circumstance looks more regrettable once more. Progressive governments have been utilising pattern development rates of 3.25% for their spending projections. The Commonwealth Bank and IMF have now recommended that 2.75% is more probable, and even this looks excessively hopeful. Development since the GFC has arrived at the midpoint of just 2.5% per annum.
Worldwide markets have fluctuated fiercely since those dim New Year forecasts. Be that as it may, of late the features have been more positive. The most recent authority monetary figures demonstrated a spending spree had helped development quicken to more grounded than anticipated, 3 for each penny. Also, as opposed to diving towards US 50 cents, our dollar has moved back over US 75 cents. Surprisingly, since the centre of a year ago, the fortunes of Australia's most critical fare item, pressed mineral, are additionally turning upward. Its cost surged by 19 for each penny on Monday night, and regardless of an inescapable revision the next day, a huge amount of Australian iron mineral is presently worth extensively more than in December.
So what do we make of the mixed economic messages so far this year? Well, ANZ's head of Australian Financial Matters, Felicity Emmett, says the doubtful begin to the year was driven by unwarranted fears about the monetary viewpoint. A fresh look at the data suggests the world is not going to hell in a handbasket, she said. That estimation was sponsored by one of Australia's top financial authorities, who gave keen discourses about the condition of the economy this week. Philip Lowe, the agent legislative head of the Reserve Bank, was playful about Australia's monetary execution since the end of the mining blast. Dr. Lowe said the economy had demonstrated significantly stronger than numerous normal. A few years back, when we were looking down from the peak in the mining boom, there was a considerable trepidation in some quarters about how Australia would manage over the coming years, he said in his speech. In conclusion, after the mining boom, Australia haven't done too bad, although we have majorly lost in comparison to other countries.